Welcome to ZNTV, your trusted source for reliable news and clear perspectives. We bring you the latest updates, breaking stories, and in-depth analysis from around the world. If you like this channel, please click on the subscribe button and feel free to share your thoughts about the topics in the comments. So without further ado, let us proceed to today's headline.
Today's headline is Nvidia investment in Intel. Nvidia has made a $5 billion investment in Intel, buying Intel stock at about $23 and $28 a share, roughly a 6.5% discount. Alongside that, the two companies are entering a strategic partnership. Think joint efforts to co-develop chips for PCs and data centers, integrating Intel's CPUs with Nvidia's powerful GPUs. On Wall Street, investors cheered. Intel's stock price jumped roughly 23%, its biggest single-day gain in decades. For Intel, this gives some much-needed financial breathing room. But here's where we need to get real. While this deal helps in several ways, cash infusion, partnership credibility, yield improvements, there is a deeper issue that hasn't gone away. Intel's lagging in manufacturing foundry technology. The concern is not about money alone, it's about execution. Intel wants to build up a foundry business that can rival giants like TSMC. The problem? External customers still aren't flocking to use Intel's foundries, and tech nodes aren't catching up fast enough. Nvidia, too, has been open about its reservations. Praise for TSMC continues, and there's no firm commitment from Nvidia to rely on Intel's fabrication facilities anytime soon. So despite the optimism, the core issue remains. Intel must improve its chip manufacturing capability, both in terms of technology, smaller, more efficient nodes, and earning trust from both customers and the marketplace. Without that, even large investments and partnerships won't be enough to fully level the playing field. Now, let's look ahead. What are the possible outcomes, and what should we be keeping an eye on? Upside. If Intel can leverage Nvidia's investment plus the new partnership to accelerate R&D, improve yield, and maybe win over external foundry clients, this could mark a shift in the semiconductor landscape. Intel could become a viable alternative to TSMC, especially for companies wanting more domestic manufacturing diversification. Risk. On the flip side, if Intel delays further, or costs balloon, or if its fab technology continues to lag, the deal may be more of a lifeline than a game changer. There's also competitive pressure from AMD, from Asia's foundries, and constant expectations in the AI chip space. Intel may struggle to close the gap. What to watch? Will Intel announce new foundry customers? Will Intel shorten the time between technological node generations, i.e. make its fabrication processes more competitive? How much of the partnership's work yields real products, not just announcements, especially in PC chips and AI data center chips? Regulatory geopolitical shifts, e.g. policies about chip export, subsidies, government investment, that could impact Intel or its rivals. To resume, this $5 billion from Nvidia isn't nothing. It's a strong vote of confidence. But for Intel, it's not the cure. The big challenge, keeping up in manufacturing, is still front and center. If Intel plays its cards right, this could be a turning point. If not, it may just have bought more time. So is this move strategic? Does this deal pose a risk for AMD and TSMC? Please share your thoughts on this score.